All right. Hello. Good evening, everybody. Mark Pinto here at Phoenixville Public Library, welcoming you to tonight's program. The subject tonight is something that's been revolutionizing the worlds of finance and investing, yet it's still a mystery to many people, myself included. Even its name, cryptocurrency, connotes something, well, kind of cryptic. So to demystify the subject, we're happy to have back with us tonight Fred Hubler, President and Chief Wealth Strategist of Phoenixville's Creative Capital Wealth Management Group. You can stay muted during the presentation, but if you want to ask Fred a question during the presentation, feel free to unmute yourself at that time. So with that, I'll turn things over to Fred. Welcome.
All right, thank you. I would like this to be a workshop, so I don't have a billion slides to share with everybody. Thank you for being here. I always like to start something with the takeaways. And one reason you may want to pay a little bit of attention to me is from 2008 to 2018, I was, if you Google, since I'm not looking at you, you can Google right now, I can't see it. But if you Google best NFL financial advisor, I still show up. So I promise you, if I can explain this stuff to football players who are in the equivalent of a car accident every weekend, I can explain it to you guys. So there's no stupid question. I'm here to explain it to you. But the outcome and my takeaway for you is for you to be able to be conversational about this stuff. Maybe even be interested to take a look. And in the link, there is in the chat, there is a link. You can start with $5, $10. You don't have to be a millionaire to do it. And I also want you to not be that person without a clue. So if you're going to be at a cocktail party, or when we eventually can, be in these kind of things in real life, you don't have to be the expert. Just don't be the one that has no clue what they're talking about. And a few reasons why we want to look at this. I thought I was being smart when I have 9-year-old twins. So 2011, I bought Disney and I bought Apple stock for them, in my head, for them. It's in my name, yeah, but it's for them. And I made the mistake of figuring out it was $10,000. So it wasn't it was a decent amount to set away. And my first audience participation time with you guys is, how much do you think that $10,000, if it was in Bitcoin, would be worth today? And feel free to just put it into the chat if you don't want to, if you're eating dinner or whatever and you don't want to talk or be seen. Just put in the chat, what do you think $10,000 in 2011 would be worth today? And no cheating, because 2011 there was, there's calculators out in there now. And Mark, you can play too.
$1 million.
$1 million, okay. I'll give you a hint. It's higher than that. Although I would have more than happy to have made $10,000 into $1 million. Anyone want to put out a crazy number that you think it might be? And again, if you how much?
50 million. 50 million.
All right, 45 million is the answer. So one of the reasons that I want to talk to you about it, and I think it needs to be talked about, is Bitcoin. And we're going to focus on Bitcoin because that's the 8,000-pound gorilla. I'm also going to talk around Bitcoin of what the similarities of all of it. And you're going to get a very good walking conversational background about crypto and what it is and how it works. This is not an investing. I'm not recommending you invest in it, but I am trying to explain what's going to come down the road. And one of the things I thought of this morning is, and again, audience participation time, if you had to explain the internet in 1993 and 1994, Netscape's not really out yet. No one knows what it can do. No one really knows how it's going to change and destroy destroy some industries and create from nothing other industries. Amazon wasn't around. So, and you don't have to give an answer outside, but think how difficult it would be if you knew what the internet was and you knew what it was going to do, and you go back in time to 1993 and you're asking and you're trying to explain to someone what the internet is. There's no frame of reference for them. They have no idea what you're talking about. Networking a computer, okay, well, I have that at work, or I have that in school. But to say that everything's connected and everything's talking to each other, and your phone talks to your car, and your car, everyone, you probably would be in a mental institution. I think if you explained to someone in 1993 what the internet was and you were accurate, you would be crazy. You would, and absolutely, I don't think there's anyone out there that would have said, "Oh, that sounds really cool. I can't wait for that to happen." There would be like backing out of the room a little slowly and calling the people with white, white jackets. So Bitcoin only took 12 years to go over $1 trillion in value. So I'm still trying to explain, the why why it's important and why we need to talk about it. And for a frame of reference, Google took 21 years, Amazon took 24 years, Apple took 42 years to hit that $1 trillion mark, and Microsoft took 44 years. So in history, there has never been any asset that has grown as fast. $1 trillion, you're starting to talk about serious money, has grown as fast as Bitcoin. So if you think of it in a basic way, Bitcoin is based on a technology called blockchain. And I recommend, I have a video on Bitcoin I'm going to share with you in a little bit, but I kind of want to get an overview, go into a less than 2-minute video, and then I'll be right back. So I'm not trying to pawn off, and I'm not going anywhere. But the video I found, I wanted something less than 2 minutes that kind of tells the whole story, so we can come back and talk about it and flesh it out and kind of make it a little bit easier. Because in 2 minutes, you can't explain something that in 12 years, has become over $1 trillion. But what I want to ask of you guys and girls, put some questions in the chat so I know that while I'm talking, I'm addressing what you wanted to get out of here. All of you wanted to leave this with something. I need to know what that something is, so I give it to you. Because there's so much to go into, and there's so different variables that we can focus on. And all of it matters, but if it doesn't matter to you, it doesn't matter to you. And I want to make sure that you get what matters to you. So think of the questions you have. I'm going to share my screen. And if I do it right, it'll be optimized for video. And I promise you, it is less than 2 minutes. And I'm going to shut up. And then by the time the video is down, I want to see some questions in the chat.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower, you can use them in every country, your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Bitcoins are generated all over the internet by anybody running a free application called a Bitcoin miner. Mining requires a certain amount of work for each block of coins. This amount is automatically adjusted by the network such that Bitcoins are always created at a predictable and limited rate. Your Bitcoins are stored in your digital wallet, which might look familiar if you use online banking. When you transfer Bitcoins, an electronic signature is added. After a few minutes, the transaction is verified by a miner and permanently and anonymously stored in the network. The Bitcoin software is completely open source and anybody can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Let's look at some examples of how Bitcoins are already used today. You can purchase video games, gifts, books, servers, and alpaca socks. Several currency exchanges exist where you can trade your Bitcoins for dollars, euros, and more. Bitcoins are a great way for small businesses and freelancers to get noticed. It doesn't cost anything to start accepting them, there are no chargebacks or fees, and you'll get additional business from the Bitcoin economy. For your first Bitcoins and more information, visit WeUseCoins.
All right, I am not a commercial for that. That was just the video I wanted to share with you. We got some questions. So is it too late and how do you mine? Okay, so I'm going to talk a little bit early. I'm going to talk to Janice a little bit about mining Bitcoin. But I want to make sure we have a very understandable, because we're still, I think that whole video, everything was accurate and it still doesn't make sense. And you'll never hear I have an MBA. I'm not going to, I think you have to communicate the way people understand it. So let's pretend that I have a photo of Mark Pinto stealing from the library. I needed to get something, since this is going to be recorded, Mark, I need to have something clean that we could talk about. So I got a photo and I email him and I say, Mark, I saw you steal that book, or I saw you throw the book out, or whatever it is that's and his job's in peril. And I say, okay, $100, I'll give you the photo. You know what he's thinking. I have it on my phone. I might have sent it to my wife. I might have put it on my Facebook page. There's nothing scarce about anything that's a digital asset. So the blockchain, which is what every cryptocurrency is built on, including Bitcoin. That blockchain is the technology that at a very basic level, and we want to start at a basic level and build up, it provides scarcity to a digital asset. So if that photo was connected on the blockchain or had a blockchain on it, when Mark paid me $100 and I give him the photo, that is the only version of that photo in the world. So the things, and for those of you that work around title insurance or work for Ticketmaster, I will give you today my condolences. Because let's talk about Ticketmaster as an example of how things are going to change on our watch. So I have Eagles tickets. I know the draft's tonight, so I want to make sure I don't talk too long. I have Eagles tickets, and Mark wants my Eagles tickets. I'm going to pick on him because I know him, and I know Janice too. I have Eagles tickets. He wants my Eagles tickets. I want his money, but in this example, I don't know him. He doesn't know me. So that's where Ticketmaster comes in, and there's a ton of industries that all they do is validate two disinterested or two non-trusting parties. Now, I do trust Mark. He trusts me, and we can always tell. But if we were on the internet and I didn't know him, there is that very valid mistrust. And so what is going on now, and there are smart contracts that do this with zero human beings. So that's why I'm talking about Ticketmaster right now is not using blockchain. Ticketmaster charges Mark 15% and charges me 15% for me to get my Eagles tickets to Mark. I think we've all used Ticketmaster, and when someone's selling and someone's buying and there's an intermediary, they're taking it from both ends, or they're getting paid there. Pretend that didn't happen on Ticketmaster. Pretend that happened in something called a smart contract. These are out there already. So just like not everyone knew what the internet was in 1993, 1994, and now we can't go a day without talking about it. This is the kind of, by the time you see Bitcoin everywhere, Janice, then it's too late. But it's not everywhere. It's hardly anywhere, and we still don't understand it. And it's so new that people are like, I don't get it, And there are some of us, hopefully none of you guys, but I think your grandparents, and maybe your parents, there's some people that gave up technology at the fax machine. They know, after the fax, like, I'm not doing anything else. So enter that conversation that Mark and I just had with Eagles tickets and cash. Exchange that instead of going through Ticketmaster. Pretend that we did it through a smart contract. Like I said, these already exist. The smart contract says, are you Mark? Do you have the money, and do you want the tickets? Are you Fred? And it's all computerized. It's not like there's someone asking. There's all computer. Is this Fred? Does he have the Eagles tickets, and does he want to sell them? And I put a price that I'm willing to take. The minute someone, and let's say this example is Mark, gets to the price I want, it automatically executes. That is a smart contract. Smart contracts are built on a cryptocurrency called Ethereum, which you can buy on that link. It's much cheaper than Bitcoin. And if you think of Bitcoin as gold, Ethereum is silver. Still valuable, still useful, still has production. So we want to think of the blockchain is the technology that's underneath all of this. Pretend like that's the App Store. I think you know what an App Store is. You have it on your phone, you have it on Apple or Google. So if you think of the blockchain as the App Store, Bitcoin is just an app written in the App Store. Ethereum is just an app written and sold on the App Store. So I hope that makes a little bit of sense. From anything digital can be scarce when it's on a blockchain. So besides Ticketmaster, title insurance. I will tell you that I don't think title insurance will be here as we know it in 15 years. Because what goes on the blockchain, this counts for everybody. Bitcoin, Ethereum, all the cryptocurrencies, everything on the blockchain is in the blockchain. So that transaction, if I send money Bitcoin to Mark, or he sends it to me 5 years ago, that's still on the blockchain. And that's really what the miners do. The miners make sure that everything's there. So Janice asked a question, what makes it valuable? Well, I'm gonna, to think about it is, money right now is a shared hallucination. It's not backed by anything. We, our country's the cleanest dirty shirt in the laundry when it comes to the economy and how things are going. And And there is no real value. The value of a dollar that I will accept from you is the fact that I know someone's going to accept it from me. It really is that simple. It's a means of communication, and it's a means of exchange. And so the reason Bitcoin's valuable is if I wanted to, I could sell everything, put it into Bitcoin, put the Bitcoin on a thumb drive, and they have wallets that are thumb drive, leave the country, plug in the thumb drive, and get all my money back. That happens today. That happens everywhere. And that's a value of Bitcoin or Ethereum. That's the value of the cryptocurrency. And unlike the dollars that the Fed's printing as fast as the printing presses will run, Bitcoin automatically will reduce the amount of outstanding coins. It's in the code. It's built in. So even if no one else buys Bitcoin at $53,000, if it automatically reduces the amount of coins every 7 to 12 years, that number will go up. And one of the things that I believe in, and I think we all can believe in, self-preservation. There's no one out there that will do something that doesn't help themselves. They may do something to help someone else, but they don't normally do anything that isn't going to help themselves. And I believe in self-preservation. And one of the things that will get Bitcoin to be more readily available, and you're already seeing it, and this was in my notes when Mark asked me months ago to do it, is we all know there's probably rich families and there's rich people going to their financial advisors in New York City saying, well, I don't have any Bitcoin. Like that, that. I can almost picture the kind of people saying, I don't have any Bitcoin. And they're like, well, it doesn't have any value. And then, it's up from $10,000 in 2011 to $53,000 per coin. So that 10,000 would be $45 million. You can't tell me it's not valuable. I mean, math is that. It's more valuable than almost anything else you could have bought in 2011. But that value is not yet perceived in the true price of Bitcoin. Can it go to zero? Sure. Anything else can. And that's why I want you to play with it. I think at the end of the day, it is the internet. It's not, Bitcoin may not be the thing. I think it is. I don't think there's any chance it can't be one of the major things. But what is not going away is that blockchain technology. That blockchain technology is more than revolutionary, if there's such a word, because companies now can implement a blockchain privately. So it's not a blockchain you're going to buy. Because remember, all the blockchain does is make something that's digital into something that's scarce and trackable, and only one person can have that. So think of your medical records. Think of your Social Security information. Think of anything that's digital, and everything today is becoming more and more digital. So again, the value of blockchain is unimaginably, you can't imagine the value of a blockchain, of getting something digital and being able to track it and own it, and it's yours, and don't lose your password or else it's not yours either. And that's really an issue with it. So the innovation is blockchain. It provides digital scarcity, and that is the underlying thing I want you to take away. So, what's this big thing about? That's Joe. I'm going to get to your questions. These are all excellent questions. Keep them coming. I'm going to go through all of them. So the smart contracts means there's no intermediary. And Bitcoin right now, you can send a Bitcoin to anyone else in the world with very little fees. There's value in that. Now, the difference and the problem we all have with Bitcoin is it goes from $60,000 per coin to $53,000 per coin, back up to 60,000. So I don't think it's going to be a true regular source of commerce until it plateaus at a price that kind of doesn't wiggle as much as, 53,000 to 63,000. And there's entire articles that have looked at how many coins are outstanding and what the future halving, which is that automatic reduction of coins, and the numbers go to 250,000 to 500,000. So to get to Genesis, is it too late? Absolutely not, especially if it becomes more available sooner than people are thinking, or more readily, usable. You can buy a Tesla now with Bitcoin. I wouldn't recommend it, but you could. But here's the fun thing: that example I gave you, where I sold everything and put it on, on Bitcoin and put it on a hard drive or a flash drive, and went into a different country and plugged it in. I can go right to dollars from that, like the Coinbase and the link I sent you, BlockFi. you can enter every day, you can go from Bitcoin to dollars. So you're not stuck on Bitcoin, you're not stuck on dollars. It just is a different version. It's a different it isn't backed by anything, but neither is the dollars that we have today. And if the thing that makes it valuable is its use in real life. So Bitcoin, when it becomes standard, will be something that is easily, anyone can take it. You don't have to worry about currency devaluation. You can change Bitcoin into your home currency. And there is a huge distrust in Federal Reserves around the country. There's just a huge distrust. They're making money after money after money. And if something happens with inflation, but there is a more readily available way of doing commerce, Bitcoin will be that more readily available way of doing commerce, as long as there's electricity and as long as there's that infrastructure. So the value of Bitcoin ultimately based on the value of an underlying currency, the answer is no, because the currency can be converted into any currency you want. So you can go from Bitcoin to, if you're in India, you can convert it. You can always convert it to dollars and to anything. So it really is a conversion. There are values there that you can convert to, and there's whole websites out there. And again, if you put $10 in Bitcoin, you're going to see it was really easy to do, really cheap to do, and you're not buying Bitcoin today to sell it or to transfer business with it. The underlying value in Bitcoin is the fact that it's now almost like a new currency that people are recognizing. Mark just said that there was a Bitcoin. What was it? Mark, what was that? The supermarket?
Bitcoin ATM at the Redner supermarket.
Yeah. So that Redner's is it's not like it's Trader Joe's you would expect Bitcoin, but not there. So here's the biggest thing with Bitcoin, and I think this is also part of the value. If it was hackable, it would have been hacked when it was on a couple hundred computers. And the reason I'm saying that is, remember that I said that it's all about the blockchain. Well, all of the miners around the world, all of the computers that do the work to make sure the registry, and again, every trade is always on there, they're dispersed around the world. No one knows who and where they are, because they're people like you and me. If you want to mine, and that was one of the questions, did you want to mine Bitcoin? You no longer can mine Bitcoin effectively, because the electricity you need to mine is more money than you're going to make on the mining. And one of the things, if you look at who is mining Bitcoin, a lot of it is in Finland and Greenland, because they have free geothermal energy. When you plug in your electricity in Finland, you don't have an electricity bill because it's all geothermal. So if you're going to mine Bitcoin and electricity is a big expense, go where it's free. So yes, you could do it. I honestly did it 5-6 years ago. I did it on my Mac. It was a regular computer. I did it overnight at my office. I came in the last night, the next day, my Mac was it was hot to the touch. I almost burned down my whole office. So I do not recommend you do it with a regular computer. And the days of making money on Bitcoin by mining are in the rearview mirror. I'm sorry, even for me, I can't do that and make money on it. Where you can make money is the fact that at $53,000 or $60,000, that's still not what it's projected to stabilize at. And the reason is the fact that you can have that money go anywhere and not have any strings attached to it. So the Fed can't touch it. Now, one of the things is, what if the Fed makes it illegal? Well, on the computer, you can use a VPN that simulates you being in Jamaica. I mean, so the Fed, the cat's out of the bag. And that blockchain, all of those miners around the world, that blockchain is dispersed on millions of computers around the world. So where you would have been vulnerable is if it was on 10 computers and you had access to those 10 computers and you could edit the blockchain. Because what the blockchain and all the miners do, say, okay, this transaction between Mark and Fred just happened. Is it valid? Was it really Mark? Was it really Fred? And was there anything else that it could have been that wasn't Mark and Fred? And so it kind of validates the registry. And then it looks at every computer that has the blockchain. And if 51% of the computers say that's authentic, because and they do the proofs, and that's, it's all math, and that's not what we're going to get into. Even I don't understand half of it. But at the end of the day, if it's on 51% of the computers that are doing the work, it's considered a valid transaction. So if it was hackable, it would have been hacked when it was worth 10 million, 100 million, a billion, at $1 trillion of value, and it's still never been hacked. Chances are, and it's over 12 years old, the proof's in the pudding. There's a lot of people that think that because of the code and because the way you would hack it is you would have to have physical control of an unknown amount of computers in an unknown amount of locations. There's crazier things that are more likely than that, and that's not likely at all. So I want to make sure I hit some questions. So how do you mine Bitcoin? You need to have a computer that is really expensive, that does a lot of work. There's an app that mines the Bitcoin, and all mining the Bitcoin is a fancy word of saying doing the proof, doing the work, doing all the transactions that happened just now. You get a piece of the transaction, your computer does the work, and you're really reconciling ins and outs. You're reconciling, was that code really Mark? Was this code really Fred? Did they really do the transaction? Was any other at the same time? Did that money go anywhere else? Like, could it have been anything? Was there a conflict? And the computer's doing all the work, so you don't have to do any of it, but it's all code. So what makes it valuable, Janice, to get back to that, is just the same thing that makes the dollar valuable. The fact that other people will take it from you for consideration for services or products. Now, Bitcoin got a bad rap because it was used at the dark web, used to buy things you shouldn't be buying from people you shouldn't be talking to. It has gone from there to you can buy a Tesla, and to what Mark was saying, you can go to Redner's and have a Bitcoin, a Mac machine type of Bitcoin. So isn't the value of Bitcoin ultimately based on the value of the underlying currency? Joe, the answer is no. It's based on supply and demand, like anything else. And because not many people know about it, the thought is the demand isn't really as high as it will get when there's real demand. Because even Tesla doesn't accept Bitcoin for every single car, and you can't buy the whole thing in Bitcoin because it's kind of hard to, when that dollar is worth $53,000, or that coin is worth 53 or 60, it's hard to kind of, it's kind of hard to manage that. So Bitcoin won't be readily accepted everywhere until it stabilizes, and it'll stabilize in the hundreds of thousands of dollars. So it's a 53 today, and that's a conservative number. So I'm not saying it's going to go to $100,000 tomorrow, but it's more likely to go to 100,000 to 250,000 to back down to $5. Now, Bitcoin, the reason we're talking about it is it's the most readily available. It's the VHS to the Sony Betamax. Like, it's the thing that's been around the longest. It has the longest proof of it, and it's used a lot of places. So the things that I look for is it's slowly creeping into institutions. And ironically, and that self-preservation we talked about earlier, for years, Bank of America talked bad about crypto and Bitcoin specifically. Just this month, even though last month they're still saying it's a fad and they had all the things, one of the reasons they were saying that, and they don't say this in the article, but if you do the research, they were building a fund to invest in crypto at the same time they were telling everyone that you shouldn't invest in crypto. They were trying to keep the price down. At the end of the day, they won't ever agree to that, but I'm telling you, human nature, they're saying, oh, wait, we don't want the price to go too high because we haven't finished our version of it, our building of an investment with it. So I can tell you that as more and more people with money are going to their banks and their trust companies and saying, why don't I have Bitcoin? The rule of thumb is 1%. That we're not talking a huge amount of money, but if you have $100 million, 1% is a lot of money. And if all those people with money are starting to put 1% in the portfolio, because it's done better than the dollar, it's done better than gold in most cases. It's easier to buy and sell than gold, frankly, and you don't have any holding costs. As long as you don't forget your password, it's pretty easy. And there's very little fees for when you are doing those transactions into a different crypto or even a different dollar. So title insurance, car insurance, banks, real estate settlement, all of that stuff's going to be based on a blockchain, whether it's Bitcoin or something else is, I don't know, probably will be Bitcoin because of the 12 years and the $1 trillion. But if you think about it, we all are, our collective hallucination on money at the end of the day, does it store value? And the short answer is Bitcoin stores value. If anything, it's volatile, but it's still valuable. It hasn't gone to zero. And because people are using it as money, it really can't go to zero. And if you look at the governments who really want to crack down on any cryptocurrency, and especially Bitcoin, they're the governments that don't value personal choice. They're the governments that want to control you. It's not, that's China, there's India, there's a lot of governments out there that are poo-pooing the crypto, not from an economic standpoint, but it takes away the control that they're no longer running the money supply. And there is a huge amount of people that think the money supply that's out there is way too overwhelming and way too unsustainable, and that at some point there's going to be a reset, or there's going to be, and I'm not saying we're going to have I don't know what I'm not saying, but I'm not saying it's going to be the end of the world, but things like crypto will be a store of value. It'd be nice to know you have something that, as long as you have a computer, that you can move around. Now, the best tech doesn't always win. So the reason I'm hedging, the tech that's going to win is absolutely the blockchain. It is around. The crazy thing is the guy that, we think it's a guy, and there's a guy that says he's off the grid. No one knows who he is. No one knows where he is. And if he has a few coins of Bitcoin himself, he's a millionaire, if not a billionaire. But again, he could be dead. He could be on the autism spectrum in a facility somewhere else in the world. That we don't know who he is, and that's the mystery of Bitcoin, is the person that started it. There is no Elon Musk for Bitcoin. There's a name. It's a Japanese name, but that doesn't mean he was Japanese. You can name yourself anything. Back in the day, apps were where money's made, and the apps ran on the internet protocol. Blockchain is a different version of protocol, but money's going to be made on the blockchain, meaning the people that mine the blockchain and do the work to make sure those transactions happen, that's really where the money's going to be going forward. So is there a regulator that will make sure things happen? No. The regulator is you and I. It's the world. It's the hundreds of millions of people that have some version of Bitcoin. It's the trillions of dollars of value. And whether we want to or not, or whether we believe it or not, it's happening. So that's really what this course is about. Is so if someone says, what's a Bitcoin? Well, Bitcoin is it's a scarce resource. There's only going to be so much of it ever. And it is being used, it was created to be able to transfer. And here's the things that I think we're going to get to, and it's going to be weird, and then it's going to be normal. And what I mean by that is there are games today that use real dollars, and you get to buy, let's say, Nike shoes in the game because you're a person in the game. Or more important, let's say Coca-Cola. We'll use that as an example. You pay a few bucks in the game, and you have a Coca-Cola, and it's in the game. So again, you can't do anything with it. But you also get a token in real life that's on your phone. And you take that token to any place that sells Coca-Cola, and you show them the barcode, and they'll give you the Coca-Cola that you bought in the game. That's already happened. That stuff's already happening. Your kids are probably playing it, and that stuff's just going to get even more weird. Like the virtual and the real are going to get commingled, and blockchain and Bitcoin, that's going to help that happen. That's going to be the kind of, it's going to be 0.25, very, very small number of a blockchain, especially if it's worth $100,000. No one's doing things in coins anymore. They're going to be doing things in partial coins. So there is no regulator. The difference between Bitcoin and a Ponzi scheme, excellent question. Usually a Ponzi scheme isn't backed by anything. In this case, the crypto is already being used for transacting business. And because of the automatic hashing of the coins, it's just a different way of transacting business. So it's an asset. Again, if you look at what an asset is, it's something that you pay a certain amount for, and it's valuable, and over time it goes up in value. That is exactly what crypto has done. So whether it was valuable to you, doesn't matter. It's valuable to someone else, and you could stay away from crypto and be fine. And again, not saying you should get into anything you're not comfortable with, but a lot of people weren't comfortable with the internet when it showed up. A lot of people weren't comfortable putting their credit card number in Amazon. Now we're doing it like it's yesterday. So it is different, and we don't like different as human beings. We don't like different. If you think it's a Ponzi scheme, stay arm's length away. the mathematics behind it. A Ponzi scheme typically has a Ponzi behind it, has a Bernie Madoff behind it. The cryptocurrency is distributed around hundreds of thousands of people, millions of people, and millions of computers. That can't be a Ponzi scheme when millions of people, millions of computers, there's no one benefiting from it. I think that's the other version that the difference is there's no one benefiting from crypto at a organizational level because there is no organization. There's no one body that's regulating it. There's no one body that controls it, which is what makes it valuable to the rest of the world. We trust, we have the reasons to trust. There's regulations in America, for banks, they have all these, our money's safe here. Well, that's not the same in most other countries. So it'll be readily available and readily adopted probably everywhere but America, because they want that security. They don't want to wake up one morning and find out their bank account has nothing in it. But in other places in the world, that is exactly, you don't toe the road and you don't do what they want you to do, whoever they are, they'll take your money away. You can't do that with Bitcoin. You can't do that with crypto. That is the value. And if things get uglier economically, the value of having something that no one can take away, that's anti-Ponzi scheme. That's a good question. So dollars were originally based on gold. So dollars were originally based on gold, and now they're based on the fact that you take the dollars. And there's rumors that somewhere, that the rest of the world hates the fact that everything, oil's dollar denominated, gold's dollar denominated. We're the currency of the world, which is great for us and screws everyone else over. And that's not something that everyone else likes. I don't think it's going to change in the near term. I just also don't think I think we're naive to think it's never going to have some sort of change. So Kevin, question about the IRS. The IRS hates it because they can't track it. The things that people love about it are the things governments, including ours, hate. So on your tax return, they basically ask you, and then frankly, I hate to say this, but taxes are voluntary. Again, there is absolutely, laws that you'll break, but for the most part, we are filling out numbers, and the numbers are our best, are what the statements are. But if everyone in the world stopped paying taxes, a lot of bad things would happen. But the short answer is the IRS is trusting you. When you fill out your tax form, it'll say, did you do any cryptocurrency transactions? And they're asking you to be honest. And if you're not and they find out, that's an issue. But it's going to be very difficult for them to find out because you're doing things on your phone, on a computer. You can use a VPN to mask where you are. And I'm not saying you're doing it around it. And I'm not saying you have, but crypto by its definition is privacy based. So it will be an asset sale. So if you buy and sell in less than 12 months, it's short-term capital gains. If you buy and sell in over 12 months, it's long-term capital gains. So the short answer is it's an asset. And if you buy and sell it, it's an asset. So Joe had another question. So that answers the Kevin question. If a foreign government is behind Bitcoin and it manipulates the tools, yes. So that would be, that's a rabbit hole, but it's not, I don't think it's a crazy question. What if that Sachitachi guy that we said we don't know who it is, what if that was China? Well, it was a 12, 13, 14-year long play, and kudos. I mean, that's a John Grissom story right there. So yes, and this is why we're saying 1%, if any, we're saying 1% of someone's net worth should dabble in this as an asset that's non-correlated to anything else in the world. Like there's no other thing that correlates to crypto. Stocks go up and down, doesn't matter to crypto. Bonds go up and down, gold, it doesn't matter. Crypto is its own little world. And there's value in that when you're doing a portfolio. So from a portfolio standpoint, it is still difficult to implement Bitcoin into a portfolio because there's no easy way to buy it other than buying it outside of a portfolio on the phone and on the app that's on there. So is it possible that 12, 13, 14 years ago, a genius in China said, let's make this thing up and let's let it grow to be trillions of dollars and then let's take it back when it's worth money? Yes, absolutely. It is absolutely possible. Not probable, but not impossible. Just like it's not impossible that we all become zombies in 10 years from the vaccine. I mean, there's probable, not possible. I mean, possible, but not probable. Again, and not an anti-vaxxer. I'm just saying there's other things that are possible. A lot of things are possible. Is it probable? I don't think it's probable. I have money in it that's more than a few bucks. I wouldn't have done that But if you could have invested in the internet in 1994, not just a company, but the actual internet, that's what this is. This is not just a company. It's not, we're not investing in Tesla who takes Bitcoin. We're investing in a platform that is used anywhere and everywhere around the world. And today is worth $53,000. And before it was almost worthless. It was pennies, not even pennies, whatever's left in a penny. So yes, that is, so Doge is interesting. It is, so you and I today could make a cryptocurrency. The blockchain's public, we know how it works, we know how to do it. And what Doge is very risky because it's brand new. It just came out here. It's still at maybe 25 cents. Not many cryptocurrency platforms allow you to even buy it. So I would not recommend Doge as your, your foray into cryptocurrency should be either Bitcoin or Ethereum, because those are the gold and silver of crypto. The reason I'm talking about Ethereum is the crypto that is used for those smart contracts I explained earlier with the Eagles ticket. There is contracts being written today for commerce, and in the contract, instead of Bitcoin, it uses Ethereum, which is just a different cryptocurrency. It's again silver to gold. And the reason I didn't use Bitcoin is Bitcoin's very expensive. So when you're using a contract and you're buying something for $1,500, but your contract says 0.000000000 of a number, our brains don't like that. So Ethereum's $2,500 versus crypto or Bitcoin's $53,000. So Doge was put together, and the story behind Doge is the guy that made it wants to give money away and wants to use money for going to Mars, and Elon got behind it. And when Elon gets behind something, he has billions of followers and billions of disciples that just love everything he does. So Doge is different because it's much smaller. It's much more of a fad. No one's buying and selling significant things with Doge. And it isn't something that any significant institutions accepting. Ethereum and Bitcoin, although it's on the same blockchain strategy or the same blockchain concept, Bitcoin and Ethereum are readily accepted most places, and will be accepted almost everywhere, especially if they want to look like they're cool and hip. So that Mark, did I miss any questions? I want to make sure I got everybody. And you can put the video's over, so you can put your if you want to show your face, you can put your face out.
You got them. You got them.
We got all the questions. All right.
Yep.
So good. The link I sent you, and you can scroll up. That is not me. That is it's a website I use. You can buy cryptocurrency on there. I think because I referred you, you get something for signing up, and I think I get $1. This is not why I did this. I wanted to share with you something that's vetted. You are, if you're just looking at it now, you're in uncharted territories. The territory is uncharted territory. So the fact that you're looking at it, I commend you for looking at it, because it is big. It is mind-blowing what it can become, not just Bitcoin and not what Bitcoin is already becoming, but the fact that there is it's digital money. It's digital money, not tied to any country, not tied to any currency, not tied to any application. It doesn't care if you're an Apple person or a Microsoft person. It's just digital currency. And the blockchain you're going to see, not as Bitcoin and not as Ethereum, you're going to see the blockchain when you are seeing industries collapse because computers are doing the work. Title insurance, once your house, once they move title insurance, once the government regulates that you need to have those digital records need to be on a blockchain at the county level, which is where it's going to eventually have to be, then that blockchain will have everyone who's ever bought that house, forever. That's title insurance. At the end of that's title insurance. And so the computers are coming. In most industries, the computers are here. And when you add what blockchain does, and there are companies now, private equity companies are investment type companies that buy companies. And there is right now, and this is all behind the scenes, no one's advertising it. There are private equity firms that look at companies and say, okay, who's this company's biggest client and who's this company's biggest supplier? And then what if we wrote a private blockchain? Because again, blockchains can be private. Bitcoin's a public blockchain, and that's what makes it safe because it's everywhere. But let's say those two companies implemented a private blockchain for those transactions. If they can put on a private blockchain 50%, 40% of those transactions that were already happening, even though these companies have nothing to do with each other, you just were able to take a significant amount of manual labor from human beings that were getting paid, and now a Bitcoin, now a blockchain technology has eliminated this accounts receivable and this accounts payable department. It's just decimated the department. So with all the artificial intelligence and blockchain, people that wear white shirts to work they're going to, they've never been laid off because they're CEOs or they're CFOs or they work for the CFO or they're in accounts payable. Those people are the people that the computers will probably not be gentle with how they're going to do it. Because as a manager, as an owner of a company, hey, I implement a blockchain, I pay some nerds to make this blockchain work, and then I can let go half of the accounts payable of this company and half of the accounts receivable of this company because the blockchain does it all. Did you get the gadget that I paid for? Yes, well then pay me. That's really accounts payable and accounts receivable. So you're going to see, and this is something that I think needs to be said, the amount of change, and I'm not just saying crypto and I'm not saying blockchain, we have already surpassed the amount of change, the change the human mind can normally absorb. And that's not even throwing in COVID, and I'm not throwing in politics. I'm just saying just the amount of information that is changing on a daily basis is astronomical, and that will speed up when things like blockchain get more implemented in things. And when you go and you buy something in a game and now it's on your phone, you can go get it in real life, at the store. That's going to be a lot of change. There's going to be a lot of dislocations. Is there money in there? Probably. Is there jobs that don't exist today there? Probably. But the end of the day is I don't think you will be hurt if you throw a couple bucks into Bitcoin, because you're going to either be zero or you're going to be getting into the internet at 1994, and your couple $100 becomes a significant amount of money, and you were right or I was right. But it's definitely, the upside is definitely worth the potential risk of a marginal amount of money. Again, no more than 1%, and that's only if you're super super on top of everything of total net worth. So again, we're not talking huge money, but it is something that's not going to go away, and it is something you're going to hear more and more of. And as people who have significant amount of money go to their advisors and say, well, I don't have Bitcoin, it's happening. I know it's happening. It's happened with me. And when the Bank of America say, we hate it, we hate it, we hate it. Oh, by the way, here's our new shiny new version of crypto, and you can buy a crypto fund from us. It's the tide's already changing. So I want to open it up for any questions that aren't chat wise. You can talk to me now. I see all these red microphones. I feel like I've talked too much. So bring me some questions. And again, there's a lot of videos that are simple. The video I showed you, just Google, Bitcoin 101 or blockchain 101. If you leave with the working conversation that it adds scarcity to a digital asset, that's crypto. That is, we're using it for money, but it didn't have to be used that way. It could be your medical records at some point where it's there. One thing that you probably hear a little bit, there's something called non-fungible tokens. That is exactly what we just talked about. That is, the guy that made Twitter, his first tweet, well, he made it so it's on a blockchain, so you could own that and you have it, not him. That's a non-fungible token. The token you have is that tweet, and you can have a token for a photo that's only one of a kind. Now, right now, that's not an investment. I'm not saying you should do that, but if you want to know what the hell is that, that is the blockchain making an asset that obviously anyone could take a picture of that Twitter and say, here's the first tweet. But no, only one person in the world can have that first tweet as a digital asset. And the guy that made Twitter sold it for charity. So shoot, what questions do we have? Joe, I see you unmuted.
Yeah, I don't want to sound like I really know what I'm talking about, because I don't. The sense that I'm taking away from all this is that Bitcoin is a kind of commodity that is uniquely used to purchase other, actually universal types of other commodities. but which is complicated by the fact that we really don't know where Bitcoin originated, unlike every other type of commodity almost.
That is
And-
exact.
Okay.
That is it. So not only do we not know, so we don't know where it originated, but whoever it originated, it's out of their hands. So let's say it is China, using your example. They can't take my Bitcoin away from me. I already bought it. It's already in it's my wallet. The blockchain does not allow it, even if they wrote the blockchain. And the blockchain isn't a program that could have a virus in it. It is a protocol. It is a standard of transacting things on the blockchain. So what may happen, you know, in the example that we're talking about, China comes out and says, we're Satoshi, you know, we're the guys that made it. And we own 1 trillion coins. And that still can't happen, because even if they say they own 1 trillion coins, they don't have control of all the computers with the registry. Then the registry on those the public blockchain, which is what Bitcoin's on, is on, I don't, you know, it might even, some of it might even be on that old mining computer I used in my office that I used earlier. So even if that was them, they do not control the mining. They do not have access to the registry. So think of it as a file on an unknown amount of computers at an unknown location. In order for you to have that file point to the fact that you have $1 trillion in Bitcoin, 51% of the computers that have that file on their computer, that file needs to say that that's correct. And unless China takes over the world and then controls fines and then controls 51, that's not going to happen. So even if it's true, it'll be an interesting, oh, you know, that was smart for you as a government to do, but I don't know the upside because they're not going to make any money on it. I hope that makes sense, Joe.
Yeah, it does. Can I just follow it up with one other quick observation? My original question, Bitcoin, I think, depends upon an underlying currency. It can't replace money. It has to be evaluated in terms of euros, dollars, yen, whatever. And is there any point in which you're suggesting that Bitcoin will itself become the currency?
It already has. So I can put dollars into Bitcoin and transact most business just as Bitcoin. So if
how would Bitcoin exist without underlying valuation based on currency?
It becomes the currency. The value of the Bitcoin is the fact that someone's going to take it as currency because I bought it as currency. And someone's going to take it as an asset because it was $10,000 a couple months ago, and now it's $53,000. So it's not the tulip fire sale or the tulip bubble of the 1800s, because the tulips, everyone grew them, and then the tulip bubble burst because tulips were everywhere. This is almost the opposite. Not everyone is getting into Bitcoin, and now it's getting more expensive, and the amount of coins outstanding are automatically reduced over time. So there's a demand in the world, and maybe not here. We are a comfortable country. We are a comfortable country. We have issues, but we're a comfortable country. That's not the same in most other countries. So in most other countries, there is demand to, hey, I just made some money, whether it's dollars or whatever, and I don't want anyone to take it away, or I don't want it to be stolen. I don't want to be taken away. I don't want the government to say, oh, by the way, we looked at your bank account and that money's now ours, which has happened. There's tons of examples of, you know, governments, not ours, because we have rules and we have courts, but some of Africa, you know, some of the places in the Middle East, those things are not necessarily, you know, as sophisticated as we are here with rules and regulations. If the king wants your money, the king's taking your money. If the guy in Africa wants he's taking your money. The Coinbase, the Bitcoins of the world prevent that. Now you can steal my thumb drive with my Bitcoin on it, and if you torture me, maybe I'll give you the password. But even though you physically own it, you can't get into it without my password. So you could today sell everything, put it in Bitcoin or Ethereum, leave the country, plug it in, get all your money back in whatever denomination you want, and what you sold it for is the value of the Bitcoin, which is every day, and it's a 24/7 market. It doesn't close at 9 o'clock or 5 o'clock. It's not 9 to 5 in New York like the stock market. It is 24/7. Those computers are everywhere around the world. So if someone wants something that's easily transferable, that has low costs and no regulating authority, crypto is the only thing that does that. So it isn't based. I know it sounds weird, like when you see Bitcoin, it says it's $53,000. Well, that's because we're in America. If it could, and most places, because most things are dollar denominated, it's no different than oil or gold. That's how much it is in dollars. And if we have inflation, it may increase the price of Bitcoin by itself because it's worth more because the dollars are worth more. I hope that makes sense. Again, this is brand new stuff. This is internet in 1994, which would be, once you see it, you're going to see it in high. Oh, there it is. It's going to be a little bit everywhere. The blockchain, unless you are in corporate America, you're not going to see blockchain because that's just behind the scenes kind of, computer code, accounting code, but it's going to affect, when you're laid off, you're not going to want to care that it's about blockchain or not, but it's going to be, a lot of the white collar jobs that go away because of computers will go away because of a blockchain, because of the technology, and hopefully other jobs, start up. Thanks for your questions, Joe. Any other questions from anybody? Janice, you had a bunch of questions. Did I confuse you more? I hope I didn't confuse you anymore. So that link I showed you up in the front, you can start with $10. So instead of buying yourself a sugar Starbucks diabetes in a cup, buy yourself crypto, forget you own it in 5 years, and either buy a lot more stuff or it won't be worth much more than what you paid for it. But if you look at how it's done and how it's supposed to do, it's there's a lot more headwinds for the dollar, and gold is there's, to get to Joe's point, yes, it could be China, but also we could find a huge pocket of gold in Africa and now gold goes down. I don't think that's going to happen. Possible doesn't mean probable. But I hope that your next cocktail party, if you get to see real people in real life, you'll be a little bit more, conversational. It is new, it is different, it is weird, it is all those things, but it also doesn't mean it's not an asset. If you look at the definition of an asset, it absolutely is an asset. And it's being used as currency, just like gold used to be and coins used to be and shells used to be. All right, Mark, I promise you I'd be under 8. I know we have a draft for people that want to watch that. Any other questions? Mark, do you have any questions or anything that you want me to cover?
Yes, could you forward that link to us?
Sure. Mark is going to cut and paste it. And do you see the chat in Zoom?
No.
So there's a
If
button.
you go to
down
if you
bottom.
go to the chat, I have put the link in the chat.
I don't see chat.
So at the bottom of Zoom, you'll see participants and
Okay.
then in there, scroll up to the top.
Okay.
And so since I don't know which one's better, whether it's Bitcoin or Ethereum, if you have $50, do 25 in each. You have $100, do 50 in each. I own both because of the, I like Ethereum being the crypto that is in all the smart contracts. I like Bitcoin because it was first, it's big. At the bottom so that everyone can see it. That'd be awesome.
I'll put it in the chat one more time.
All right. And then I have, Mark, do you have people's emails?
Yeah, I do. I can email the link too, sure. But I just
All
put
right,
it in
so
the
here's
chat
what
again, so everybody should be able to see it then.
I'm going to give Mark two files tomorrow.
Okay.
They are PowerPoints I didn't write and PowerPoints I didn't use today. I wasn't going to do this to read to you a PowerPoint over Zoom. None of us want to be on Zoom anyway. So I'm going to send you 2 different, I consider very informal or very informational, but also not over your head type of things. All I ask is you didn't get them from me. I mean, they're public domain, but I didn't pay for them. I'm not selling them to you. But they were what I had as backup. If none of you asked any questions, I would have had a PowerPoint to kind of walk you through it. But I think the conversation is, to me, more valuable because that conversation doesn't transfer to a PowerPoint too well. So Mark, I'll send you 2 different PowerPoints, 2 different sources. I'm not recommending you buy the investments from the companies, but they're things I've used to educate, myself. And they were, now spent an hour and I haven't even opened up one PowerPoint. So I wanted to give you guys, real conversation versus read to you a PowerPoint. So I will send that to Mark.
Excellent. Excellent
All right.
information tonight, Fred. Thank you.
That is all I had. Thank you, everybody. Thanks for your
Yeah,
time.
thanks, Fred.
Thank you,
Janice,
Frederick.
good to see
It's
you.
great.
You got it. Thanks, guys and girls.
It was,
Thank you.
it
All
was
right, Mark,
great.
I'll send that to you. You got it. Thank
Okay.
you, everybody.
Hey, thanks, Mark.
Thanks, Mark.
Bye,
Bye.
everybody. You're welcome.
Bye-bye.
Take care now.